Hello, Team TFT. Welcome back to Wednesday's Daily Market Outlook video. We'll be covering the DXY, the Euro USD, and the GBP USD pairs as usual. First, let's jump over here to the economic calendar. As we can see here, we have a little bit of GBP news with GDP month on month coming out at 6 o'clock, so 2 hours time. And then the start of a couple of hours into the New York session, we have a whole heap of red news, and it's doozy. So we've got the core PPI month on month. We have the Fed's funds rates. We also have the FOMC statements, economic projections, and an FOMC press conference. So that's going to cause a huge amount of volatility on our trading pairs for today. So yeah, my recommendations would be to leave the market alone today. We definitely do not recommend trading red news, especially when it's going to be this volatile. But however, we are here for a little bit of analysis, so we'll have a bit of a look. So again, we were anticipating a possible pull higher yesterday. We didn't. We sort of stayed within our 4-hour range, so we haven't really found anything out yet. We have obviously our high here, and then our low. Then our low down here, and we are still inside that range. So it hasn't really given us any sort of idea as to which way it is going to go as yet. Yeah, based on the news and stuff that's coming out, definitely could still see this imbalance area as a target before a sell-off. We could see a direct sell-off from this area as well. Obviously, it surely just depends on the news and the language coming out of the FOMC meeting. For me today, down on the 15-minute, we can see yesterday we saw price action leave the Asian range, drop lower, came back up, found a resistance there at the top of the Asian range, and then went and consolidated. So doesn't overly tell us much. We did obviously work through this area from Friday, came down, took liquidity out of there. We have come back down and retested inside this Asian range here and pushed back up. Again, not really much to read here. Still just sort of stuck in this 4-hour range, which we marked out there. We are bearish on the 15-minute. So basically, if you want to be taking longs, you would want to see this high get taken, give us that confirmation to go long, or we could continue a short bias out of here. But again, I think trading today is not the best move. Would be better to be patient, see today out, and wait and see what comes up for tomorrow. Euro USD, yesterday, obviously, big impulse up, push back down, consolidation, exactly the same as the euro. Again, we have, although, broken this structure through here, which is a 4-hour structure. If we jump out and have a look, we can see here that was the last recent 4-hour high. So we did push up through that, immediately get knocked back, but have since consolidated. So basically what we're looking for is maybe even just a build-up of strength to continue with that long bias from here. With that, again, even on the 15-minute, it was only a wick break. So it could be determined as a liquidity sweep. We could be going lower, or it could be a proper break and we could be going higher. Wick breaks can be a little bit hard to read as to whether they are actually breaks of structure or liquidity grabs going for a change of direction. So basically, yeah, we could see that pull down to go long, which would be in favor of the break of structure, or we see a short bias from here down into this lower area that we marked out yesterday, further lower before then taking on that long bias from there. GBP USD. GU again, same thing. Asian range finished yesterday. We came low, took liquidity, worked our way back up, took high side liquidity, came back down, broke structural lows, and then range bound in here. So again, not much we can really take from price action like this. It's very, when it's flip-flopping with its structure breaks, it makes it very hard to read. And again, we're in these markets to trade trends and trade things that we can understand. And if we can't really comprehend or understand what's going on in the market, then obviously we're not being told enough information. We need to wait for those candles to print. So for me, it would be, we'll jump out here on the 4-hour on the GU chart. We can see we were bearish 4-hour. We just wicked above, came back down, have not wicked below. So for me, we would be waiting to see, are we going to break this high here now, or are we going to break this low here now? And then we could trade accordingly from there, being the fact that this is a range and we are pretty well smack bang in the middle of it. It's a 50-50 call which way it could go. You are going to be better off just waiting. And as we can see here, all of these news events down the bottom here, better off just leaving any trades alone, in my experience. So anyway, guys, thank you very much for jumping on today's video. I, as always, appreciate the support, and I'll see you again on tomorrow's Daily Market Outlook video. Thank you. Thanks for watching another Daily Market Outlook video. If you enjoyed it, please give this video a like and subscribe if you want to see more videos like it. Also, guys, we are the largest Tradesmen Forex group tailored to helping hundreds of tradesmen get their time back through trading. If you want access to structured education, 18 live sessions across 7 days a week, mental health and mindset support from a qualified psychologist, and access to multiple different trading strategies from 10 different mentors, then jump over to our website at www.teamtft.co.uk. Please remember, this is not financial advice, and you should not trade based on anything I have said in this video. This is just my own opinion and nothing more. And remember, manage your risk, stick to your plan, and secure those profits. Have a ripper day.